Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording here Saturday morning, the 11th of October at about 8:30 East Coast time. My name is Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. Barry, how you doing? Pretty boring
Doing,
week, huh?
I'm doing great. Aren't you guys glad that you got the rest last week? We were talking about getting some good
Holy
rest.
moly.
Yeah,
We had some action and Barry and I always talk before the show to talk about what we're going to discuss and the general themes and so forth, and it was a really easy one this week. The high is in, and the questions now are, how low do we go on this leg, and what kind of high is it? And that's what we're going to focus on, not only on the show but in our own trading and our own analysis, because answering those questions will provide you the strategies and the roadmaps to be, put yourself in a position to be most successful. So without further ado, let's look at that big red bar and see, what does it mean?
a lot of people made a lot of money very quickly.
Hmm.
That's
Hmm.
the first thing. And second thing is, I think it's a great example of how what happens when timing comes together. And we've been sort of warning up here. Actually, 2 weeks ago, you talked about, we were looking at this exact chart, and you said, "Hey, Barry, do you see that 180 coming up?" Which was this line, 180 degrees, 180 calendar days from the low, the tariff low. It's funny how tariff ended up becoming on both sides of the that
Wow.
cycle, right?
That completes the cycle, right?
That
It
completes the
started with
cycle. Tariffs up
started with
there.
tariffs, ends with tariffs.
So anyway, last week I think I eyeballed and I put this the quarter line, and we talked about it's really about holding above it or not, and that being for resistance. And of course, on any correction, long as we're holding above 66.36, the market should be okay. It's in good shape, especially if we're in this sort of very topish mode. We shouldn't be making deep corrections, and we should be holding above the 636. Well, that was pretty much where we left it. We had this number up, we had this 6727. That was really the key because that's where we were hanging out all week. The idea is we want to be able to hold above it. And we were also, I think Monday, I can't remember which day, but we also, well, if you guys are not following us on X, you can do so. The links are in the description because we post stuff every morning. And basically been posting stuff all day. I post in the morning mostly just on the S&P. And I'll give you guys a little bit of a look into that because we were covering this basically scene by scene. We had this done because we were expecting it. We knew what to look for because of the 180, and we talked about how these 180s don't come around every corner. All right, so that was in the timing. We talked about price, and it was really the reversal that came in on Friday, right? So we had a Thursday high. Let me zoom it in. If I zoom it in, you guys can see we had a Thursday high. Friday, we took the low out. And I think my comments on Friday was, and we'll look at that in a second, was, hey, if we take the low out, Thursday low out, then we're going to have real weakness. And that's what we were looking for. We're really looking for that to come in. And of course, it came in spades, a lot more than I could have imagined. And we took out we got below this 66.33 level. I had 36 here, but let me correct that. And that was it, right? After that, we lost that really key support area. Now it becomes resistance. So I think as far as counter trends go, we want to see, counter trends if they're stalling out below 66.33 or not. And how much further can we go? That was the other question. So we're going to look at all the charts. We're going to look at the ES a couple of different ways. We can look at the front month. We can look at the NASDAQ. And Ben, you have some really good things to show in the NASDAQ and the Dow. So when you guys look at all the indices, I think you have a much better idea of what's happening, sort of situational awareness, right? For now, just looking at the possibilities here, and in these situations, S&P always pushes a little bit more than you think, right? Just like here, we were looking at the 67, 27. It's actually probably a little lower. Maybe let's say 23. Um, and of course, we tried to push a little higher, push a little higher on the daily, and then we rolled over. But I want to show you how we also bracketed this move, step by step, as there were other timing um, windows that were showing up in different time frames. So we'll get into that. So for cash, that's really all I can say. Where can we go? Well, we have this 64.53 level. I think is a reasonable level for it to stop. And the S&P is never reasonable. So I'm guessing probably a little lower would probably be the flush, if we get to that. I'm not looking, you guys know my sort of horizon is not super long. It's really about week to week and maybe a little longer. I'm thinking of time wise. Well, we'll we'll talk about time as we go. But price wise, let's say 64.53, possibly a little lower, right? So if we take out 64.53, depends on the momentum that we're carrying, we can push a little lower. But if you're not going to reverse, around here somewhere, this is based on the cash again, then we have the ultimate, we have the quarter square, which is 63.63, and then we have 62.75, which is 180 degrees. And that's kind of how we have to measure it. I mean, that's how we measure it. Those are the numbers I would go with. We have a quarter square here. I mean, we got very close to it. I can't imagine us just slipping right through Sunday, Monday, or is it the cash? So Monday, without some kind of a counter trend. So whatever counter trend, I think that's the key now. We want to see where the counter trends stall out. And we'll do that for the other charts as well. Because if we can manage the counter trends and where it goes, practically doesn't matter because it's a trend, just like the bull trend, right? See how we got past all these different levels on the way up. So on the way down doesn't have to be any different. But the fact that we covered so much, in one day, practically a month of upside was wiped out in 2 days. So I'm thinking the time that probably shortened up the time. This is sort of basic Gann theory, price and time. And if price overbalanced by taking out an entire month in 2 days, I'm thinking the downside time wise it's going to be shaved off. So that's something to keep in mind, right? But I think price action is the thing that's going to help us figure out how to navigate. All right. And the reason for that is, price is price. This, 180 degrees, this 72.75 will always be 180 degrees. But time wise, we always have more time. We can have, we can have 45, we can have 90, we can have 30, it's infinite. So that's why price seems to be a little bit more reliable in the long run, especially when you're trying to deal with trends and trying to bracket the counter trends. And that's why we always talk about price levels more often. And even the one thing that we post on X, the fuse lines are just always the level. And we'll take a look at all that later. So that's it for the cash. Let's take a look at the Dow. Usually we wait on the Dow. Let's wait for that. And you can see how we tapped the 288 degrees up. That's from the September-October lows. And last week I talked about that. We talked about how we just about tapped it, and then we just a couple of days down, and we were looking to see the counter trend. I mean, the counter trend can only be a couple of things, right? Either we're going to do a false break, or we're going to have a lower high and roll over, or we're going to have to settle above this 47,162 level and settle and move higher. And so it was the second choice of the false break that came to pass. So we had the first high, we went up, did a false break, and we had a reversal immediately, right? The next day we took out the previous day's low, and from there it was just lower highs. all the way. And this is sort of what kind of leads to, this is not exactly, but it's sort of a fractal that leads to the waterfall moves. And this looks like those soldiers pattern, Ben, and then it just dropped. So you guys had this information last week and the week before that, ever since we broke out of this little triangle to the upside, and we knew where the limits were, right? So that's that. And
I
par
mean, I mean
support.
that's
Mhm.
one of those classic setups, Barry, where you got your false break right at a full square, the 288.
Yeah, that's that's pretty
You
good.
know,
Mhm.
that's if when things line up like that, you take your shots.
Exactly. Exactly. Especially when the whole thing, right? Is I mean, the market's always like a story. I always think of it like reading a music sheet, and as you go, you can kind of see, kind of anticipate what comes next. So yeah, this is perfect. Putting it all together, right? And if it wasn't for the charts or the storyline, this would just be another high. And okay, we're correcting, we're going to go higher. But it was really sneaky how it showed up. If you didn't know what was coming around the corner,
No, it's true. Very
right?
true.
All right. So 50% of that square, current square, would be 44,873. And we'll go ahead and use that. So that would be a reasonable place for the market to, I don't know, take a little break before counter trend or find support. But we know market's not reasonable. So I'm really going back to this zone that we had marked out on the way up. So this zone is really good support now. And so we're basically looking at that next. So that would be between 44,300 and 43,723. So these are the two numbers, 723 and 300. So this area is the next. If we take out the 50% of the square, obviously we could stop at 44,300, dip a little, and then go for a counter trend. That's what I'm looking at. Obviously, if these level by level gets taken out, then then we have some kind of a bigger thing happening here, and we'll have to deal with it as it comes. But for now, uh, given my horizon, we have to work with it with these price level, and if you guys want to catch up, if these gets taken out, that's why following us on X will be good because everything's up to date, you know, rather than being once a week. All right, so it's the yeah, so that's the Dow. Let's move on to the calendar day chart. This is a continuous futures chart. Again, we had the 180 come in. The idea was, can we settle above this 6760 and move higher or not, right? And this is very sneaky, it settled above it very nicely. I mean, I'm telling you, it's about as sneaky as it gets how it all kind of set up. So this is a very good flush as far as flushes go because if you get a flush, you're not supposed to know it's coming, right? So it was really, really good, regardless of how it got started or who started it. But you can see how we settled above it nicely. But it wasn't enough to uh, get long because we really didn't get a retest, right? We always talk about settling above and kind of getting a retest. The retest was Friday, because we were up. The high bar was Thursday. Then you want to, obviously, if you're sitting here, high bar, you don't want the low of the high bar getting taken out the next day. And that's what happened. If it does, you really want to be careful because obviously that means the pattern's breaking up and we're not really holding above. There's no air above the level. Anyway, so we rolled over, and once we had that little reversal right there based on Thursday's high, it was gone. So this is based on the continuous chart, right? So
Barry, one of the tools that you always use to, prevent getting sucked in by these guys is that eighth, and the eighth held again.
hmm
The eighth above, the 1/8 above the full square. It practically
Yeah,
tapped it.
yeah, it's right there, right around 68, 21, 22.
Mm-hmm. Mm-hmm.
Yeah, it always saves you, man. Let me tell you, especially when the run is getting a little old. You don't want to just be jumping in fresh, just like we made it, coming off of a new low or starting a third, right? You want to, you want to let it, you want to see proof. And eighth is a good way to monitor that. And it definitely paid off here. It pays off every time. So it's worth watching. So based on the well, we can look at the front month too. So it'll be very similar, but here on the continuous chart, it's 65.17 is the 50% of the square, and we have some pretty good support here. So we can dip a little below and start a counter trend, or if this gets flushed, I mean, this is a really bad sign, which means we're really opening up down to 6,400, and I doubt it's going to hold here because of the way it looks. We're going to go a little below. Let's just go all the way to the 8th. That'd be 63.44. Hold on, 63.40. So 63.40. Then we obviously have the big one, which is 62 to 75. Let's say these are not small numbers. I mean, the only way we're going to get there in the next 2 or 3 days is something to really break, right? Which could happen. Anything can happen. So anyway, watch these levels, see how we get taken out. Watch the counter trends. I think that's the key. Check us out daily. We post every morning, so that'll help a lot instead of going weekly. Especially, on a regular market cycle, weekly is fine. But if you get into some kind of a jam, then I think following daily might be better. So back to the front month. Front month, pretty much the same story, right? This is the daily of the calendar. We were cruising right about this 67.35 from last week. Yeah, 35.38. And the same thing happened, right? We got above, we were really squeezing in there. Then all of a sudden, we had a reversal. So the thing to watch was really the time and price, and also the price action. We wanted to see what happens there. You can see the 180. These are calendar days, came in right there, and I think degree wise it was a little bit more. So the 180 came in pretty well on time, a couple of different ways. And this was really the sneaky little, I would say it's a little trap. And once that reversed, and our marker here was 735, and once that went, it was all over. Why? Because of the timing, right? And okay, so that's that. And the quarter level, it pretty much where we stopped out was 65.55, and the next level down next quarter would be 63.73, just right there, 180 up. That's a really good level. Obviously, markets aren't always clean, so I would expect it to go a little lower, but I think let's manage this area first, and we want to look at the counter trend to see if they get stuck at these key levels. All right, so yeah, that's that. Well, here's a continuation from the October low that we've been watching. Same thing happened, right? These are all different. They all managed to sneak up a little bit above the high, act like, oh, everything's cool. We're going to just move higher. And we reversed. So now if you didn't have the timing, this would be terrible. You wouldn't have any idea. Now we did square out perfectly right there, right? And this part of the move would be the false break. And I think that also shows up. It shows up in the weekly too. So
What's interesting, Barry, too, about the timing is that everyone's like, "Oh, it's the tariff announcements. It's the tariff announcements. That's
mm-hmm.
what caused it. It was the tweet from Trump." The whole point is that when you have these timing windows, that's when these things happen. It's not the tail
Mm-hmm.
wagging the dog. It's the other way around. It's
Right,
because of the timing windows these events happen.
right. Yeah,
And
absolutely.
that's why we don't know what the event's going to be, and we don't even know if an event's going to happen. But when they come up, these big ones, these 90s, these 180s, these 360s, we talk about it because that's when it's most probable going to happen, right? When the
Yeah.
probabilities of something like that happening rise dramatically than any other day or any other time window, and
Mm.
that's the key thing here.
Right, exactly. And that, yeah, it's sort of like hurricane season, you expect something to happen during the season. You would expect a hurricane to show up. So I think these timing points are like little mini hurricane seasons. If you want to use that analogy,
No, that's a good
um,
one. That's a
right?
very good one.
And
Yeah.
you would expect hurricanes to show up. So if it's
Right.
180 or any bigger timing cycle expiring, you would expect something to happen. So what do you
Hmm.
do then? Then you look out into the horizon, you look at the radars, whatever. So
You
in
don't
our
plan a
case,
boat trip at sea.
exactly. And you want to batten down the hatches, right? So pretty much that's why for the last couple of weeks we were talking about risk. And I think
Risk. That's right.
way early, we were talking about risk uh, 2, 3 weeks ago, and we weren't just talking about risk for fun. We said, hey, there's stuff coming up. There's 180 and there's some other cycles coming up. And so it's good to tighten things up. And that's our job, right? If you're going to forecast, we have to talk about probabilities of one thing over the other. So,
The other thing I want people to notice is that little, you talk about the false break structure up there. Yeah, right up there.
mm-hmm,
At that time, the clamor about everybody jumping on board saying we're going to have a melt up
mm-hmm,
was the loudest I heard it. Paul Tudor Jones was saying it. I think Ken Griffin was saying it. All these big names were saying, yeah, it looks like we're just going to melt up into year end.
right.
Right at the time when the false break structure was put in place, right there.
Mm-hmm, mm-hmm.
And go back and check your news and see the story. See all the people who were jumping on board with the melt up. And
Yeah,
it's amazing how they try to misdirect you at these turns.
yeah, yeah, yeah.
And again,
It's
I
the
don't know if
worst.
it's purposeful or if it's not, if it's planned or if it's
Or they're
just
also part of the machine, I mean,
they're part of
automatically,
the
it's just, yeah.
right. The cycle brings it out, right? And that's certainly a possibility. It's just next time when the cycle comes up, notice the talk, notice what
Mm,
what they're trying to, get consensus around. Again, not in a conspiratorial way, just in terms of how the cycle works.
yeah, yeah. It's just sentiment matters, right? And these days, somebody can say something, for example, the president, and sentiment changes in an instant. So, or these guys talking about, oh, it's going to melt up, and sentiment changes. That affects everybody's sentiment. So,
Yeah. And it was it
yeah, I
was
think it's
the it
part of
was
the.
it
Mhm.
it was the melt up talk. And then the other thing that became incredibly dispersed was uh comparing it to 99, to the dot
Uh,
com period in
mm,
99, that
mm,
we were
mm,
going to have that major run like we did in 99 up to 2000.
right.
And I was like, wow, look at everybody jumping on board of that. It's
Hmm.
really interesting how it came up right in that 180 window.
Hmm.
So
Yeah.
anyway,
Well.
let's get back to the
Yeah.
numbers. It's just sort of, part of this is recognizing that fervor that comes in those windows and saying, oh, okay, I really got to pay attention now. Really got to pay attention.
Right. Right. And this is just as important as numbers because you kind of have to monitor sentiment and your own too, right? If you feel the sway of getting pulled into these things, then you have to go, well, I better get back to my system and my trading rules and just stick by that and not getting swayed by what's anyone saying. Yeah.
That's right.
So,
That's exactly right.
all right. So, uh, looking at uh, looking at the continuous chart, really 6,400 shows up as a big one. So we'll leave it at that. So you guys can mark that down on the continuation chart. Moving on to Nasdaq, we talked about this. Nasdaq's been sort of a key. Ben did a really good coverage last week, and here I just wanted to show how we were coming up into the square 135 by 135, and of course it doesn't have to be on it; it needs to be near. And the reason I looked at all the different indices and why I like looking at it, you kind of get the theme, right? So if you're getting close to something, it could be a little bit after. You can see some of the squares came in a few days after those, the exact expiration. And some of them come a couple of days early. But how do we know that? Well, we really want to watch the price levels. And I can't remember exactly what I said about the Nasdaq last week, but I remember we were, after the first cap here, we were looking for if we get a lower high and a reversal, then it would mean market's extra weak, right? We're going to roll over early. Uh, Other choice was a false break, taking this out, maybe tap this and reverse. That would be the second thing. And the third would be, third would really be the rare case. It's to actually break out and then reverse, right? So here we broke out Thursday. We perfectly set above that. If you guys can see that, we perfectly set above the level 100, the 135-degree line. And when that happens, what do you want to look for? You want to look at the reversal, right? What happens? We take out Thursday's low. So that's the idea, right? You want to monitor that. If that goes, well, that means all of this is going to go. You can draw a little trend line here, right there. So if that reverses, all of that goes. If that goes, it's a heavier move. And then we dropped. Okay. Coming back to where we are, let's look at the 50% of the level. That's 23,700. That's sort of the first big support level. If it gets below that, next stop is 2330, 23030. So we'll watch that. It looks a little bit high. Come on, by eyeballing it. Let me fix it, guys. Quick, close enough. 23030. You can see, we have some lows there, prior lows from August. If we really take this out, I just don't see why we wouldn't go up and just scare the bejesus out of everybody, and take these out and then go. But let's watch the first things first. So, I mean, this is a fairly solid level. It's a great level to have a counter trend. So let's watch that. And if it goes, then we have 2330. All right. So that's NASDAQ. Talked about the cash. Yeah. Well, before we jump to we can look at the 30-minute really quick. Well, before that, here's a 4-hour. I don't know if we showed, did we look at this before in the show? I can't remember, but this is the
I think
4-hour.
so.
We did, right?
Yeah.
Anyway, I saw this Gartley setting up and the timing looked pretty good. So when we were right about here, I said, hey, we have some price and time coming up, and we have to be watching that. I mean, there's too much geometry in here. It might give you a headache, but basically, this is all based off the Gartley, and there's a trend line connecting A and C that goes on. And this is the Gartley, the ABCD plus some ratios, they all line up in that box. And the timing vertical line right there is really the distance timing between A and B, right? A to B to D, right? So boom, boom, boom. Funny enough, that high that came on the 8th, also on a timing line. But that timing line worked really, it was really firing, right? We had A, B to D and to F, I guess. So it all lines up. And on Friday, I posted this, or I can't remember when I posted it, but basically, I had to shift the circle because we were kind of going consolidating forward. And once I shifted it to catch that low, and this high, right? We circled up, and Friday's high was like tapped it just perfectly. And the angle that was coming down, it was really stopped here. Then I thought, well, if we're gonna get past it, which was here, then might as well drop it at the next high, and that caught the high on Friday before the reversal. Anyway, all that worked out. Now that same angle, if I duplicate that, make a channel out of it, and I thought, well, if it's a crazy move, it ought to go here. But things get crazier, and now we're really down to the next level. Let's see. I mean, it would blow me away if we actually get down to the other end of the circle, which I'm not saying that could happen, but I didn't see this kind of a move coming either. So all we have to know is, what's starting, and the rest of it's just once you jump on the train, it's up to you, the station that you get out. So let's see what happens. But anyway, I thought it'd be cool to show the 4-hour because it really lined up. This is the 30-minute, like we look at every week. We were looking, I think 67.88 was a key level we left off with because that's where we were tapping, and 67.70. We came down to the 67.50 area, managed to get back up. 68.06 has been on the board for a while. It's major resistance. And you can see on the 8th, we tried to poke above, came back down. That looked like a false break, and it was going to go. And it did, right? We had false break, came down, little correction. And this was pretty much of a, similar move to this, what happened Friday. We went up, false break, rolled off and came down right into this right in the support area, which if you look back, it's kind of where everything was stacking before that. Anyway, we rolled up, got right on top of 67.70, went back to test 67.88, really couldn't make it, tap, tap, tap. Came back to test 67.70. You can see we had air above that this time. Went back up, and this Friday, we were opening right at 67.88, and I'm thinking I had the trend line drawn in, and either way it could go, right? We could go higher, we could go lower, but I basically said 68.06. Well, it's still resistance, so I only talked about that, and that if we get rejected, and we get rejected at 67.88, and we take out Thursday's low, we're probably going to get really weak. And that's pretty much what happened. We had a trend line, broke it here. We gave it up here, reverse, false break over the 9th, the midday action here. And the rest was just history. We just rolled off all the way down to 65.52. I'd hate to give any numbers here because there'd be no end to it. It's too tight for this kind of a move. So I think we'll go with the daily numbers. And I think, if you guys want an early sort of a way to check it, I would say 65.72 is what you want to watch. See if you can get above it. And the next number would be 66.07. I have 66.10 here, so let's go with that. So it's 66.10 and 65.72. What am I talking about? If we come up to, the counter trend goes up to the first level and we fail, obviously we have a hell of a lot more to go and the market's super weak. Same thing here, 66.10 area, we reverse. Obviously, we'll have a lot more to go. So we're going to watch these levels, see where the counter trend comes in. It's really about the counter trend now. It's really not even about where it's going to go, because obviously it can go to a lot of different places, especially when you cover that much ground in one day. So the easy thing would be to watch the counter trends and trade it accordingly, right? So I'm expecting this to probably go on for at least first half of next week to be sort of settle into something. Well, this is what we post. So this was my comments on Friday. We have little resistance at zone above 67.88. Talked about 67.70, giving that level up would bring in real weakness. Could come in, okay, as long as if we start that move below 67.88. So that's how it all kind of started Friday. So we were kind of really watching it, right? We were on it, we were watching it. So that's a good reason to follow us, yeah, if not for anything else. All right, let's get on with the show. Here's a weekly S&P 64.50, 64.43 is a level we really want to watch next week, because basis the weekly, that's really where the support is, right? That's a full square, that's 360 degrees up. This is the level I thought we were going to stall out on this run, because it was just a good spot. But no, we went up to the quarter and we were reversing. So I think if we can get we're not going to know this at this point, but if we can get a good low around 64.43, or maybe even a little above, maybe a little below, but we end up reversing, we still might end up getting a melt up to finish up. There's all these expectations, right? So I'm sure there are enough money on the sidelines to jump back in and do something. So we'll see. But I think the shades of that will show up where the weekly stalls out. Obviously, if something breaks, then we're getting down to, we're getting out of these lows over at 60.03, 60.76. And you guys can kind of see where that support shows up. It's right there. And, if you just take the squares out, there's really no other big spots to watch, right? As far as support goes. And this is the big area. So 60.85, 60.03, this area, this zone here. And that's for the weekly. We're really getting ahead here. But first thing is to monitor price around 64.43. And, I would say even especially if we can hold above the 62.75 area, 62, 62, 62, 65, 62, 65 here. And reverse is still good. No, I think we still have some upside, but we want to watch it very carefully because the timing was extra good. And depending on where the weekly stalls out, it's less noisy. We can see it. So depending on that, we can kind of figure out if we have more upside or not. Obviously, if we have a down week next week, which we certainly could, then you know we're really going to be watching the weekly counter trend to see what happens. So that's kind of what's on deck. Here's the ES. This is the weekly coming off the 2020 low, the COVID lows. And the same thing, 65.30 is the level that we're watching here. 65.30, 65, say 65, 65.30, 65.20, right? We'll watch that band. But really, it's this zone here. So 6,400 to 65.30. This zone is where we want to watch, see if we can come up and, make some kind of find some support there. And if we slip through that, then, obviously something broke. And here's that other level I talked about, 61.50. 65.20, I mean, that's a good zone to expect some kind of a stall. Obviously, if we lose that next, we have all the way down to 61.66 is kind of wide open. And clearly, if 6,400 goes, something much bigger is happening, not just a little correction. So that's a good clue, I would say. And 61.66 seems the obvious. But, we talked about how market's a little bit more sinister. So if we're going to get here, we're probably going to go a little lower to get the real fear into the system. All right. So that's the futures. We talked about the cash here. Talked about okay. I think we talked about enough about the S&P. We got it. I think we got it.
That's really good coverage. The numbers are there. We know what to look for.
Yeah, thanks. I think we're good. All right, let's move on. Let's move on to other fund markets. Well, we have bonds sitting and basically straddle, straddling the 45-degree line, 116.12, 116.5, right in there. And Friday, we broke out, didn't take out the high, but we moved higher. How much higher can we go? Well, the next level is 119.5, 119.16. That would be the area. This is really not, at least for me, this is not great trading. We don't really have a good setup. We've been screwing around here for a while. So let's see what happens here. If we can continue the move, I think 1916 or a couple of ticks under or a couple of ticks more would be the area to look for some resistance. Support seems pretty good. I mean, we held the low. So, 116.10, 116.5, all the way through the lows. We held pretty well. So that's encouraging. And, that could start a move higher. So 116.5, this area is next. If we can somehow, now we have a nice floor here. So, right? If we can get up above and come back and really hold above this, well, we could certainly go higher. But bonds are not outside of making false moves. So watch it carefully. Sort of like what happened here, we had a high, really robust move up to clear the deck, and then we had the ABCD down. So keep an eye out. But so far it's kind of okay. It's moving in a way that makes sense. All right. So looking at the weekly bonds, you can see why I'm not that interested. We're still kind of range bound. We have the 144 degrees sitting above. It'd be nice to break out to the upside of that if we're going to do that. So that's 119, 14, 18. So 19.5 to the upside, which shows up on the daily chart as well. So we're kind of range bound in this till we happen. You can just do your system in either direction. It seems to be working. But in the larger picture, what happened was, we had this low, basically had a lower high with the false break here, and we are trending higher. So let's see what happens at the 144 when price meets that, or we get some kind of reversal, right? So this is very bullish. You can see how we came down for 2 weeks. We held right above that old floor. And that's why I'm talking about this floor. If we break out, come back, this area becomes really good support. So for now, we're just watching that and see how it's gonna happen. There are other better markets to trade. Looking at crude, well, right? So 65, 64, 75, 65 area held again. What did we have right before the break? Let me expand a little bit. Right before the break, a little false break. Everything looked, like it was going to get better. Of course, after the false break, boom, reversed the next day, and it was all over, right? Then we came back to the 61 level, reversed and down. Question now is, how low can we go? And I don't know, but $50 definitely has a label on it. So that's
It
90
sure
degrees.
looks like that $50 is the half square magnet, right?
Right. And it's, 90 down from the high. So maybe, maybe
Hmm.
we get there. Not for long. I think, in here it would be a hell of a place to trade, kind of like what we had a while back. Anyway, let's watch it for now. But this ABCD completion might be the thing to watch. So we might not be that great. These chart, because crude does ABCDs all the time. So that would be right about 56, 57, 56, 84, 57, which would still be a higher low. But I'm thinking, hey, if we're going to get there, might as well just flush this out and be done with it. I think the move higher, I said like within 3 to 6 months. So this looks like the kind of price activity you would see before move higher. So let's watch it with patience and wait for it to line up. So that's kind of where the support is looking like. So other than that, not much. Of course, the 61 area is now resistance. So watch out for that. If we can't get above it, then we're going to be stuck here maybe for 3 months. All right. So the weekly is looking pretty, pretty weak, right? We couldn't really get above the 60-degree line. We tapped it 3 weeks ago, right there, September 26th, the week of September 26th. And we reversed. We got a weekly reversal. Just, couldn't do much. So now we're trading. I think the test of this low is the key. So 55, around 55 is that low. Question is, are we going to make a lower? We're going to go lower or make a higher low or a false break. So we'll watch for that. Let's move on to gold. Gold is not giving up anything, kind of doing its own thing. 39.69 was support. And you can see last week we held it nicely 2 days in a row, right? We were up, then down a couple inside day. Can we squeeze a little higher up into the next square? I think so. Why not? 41, well, 47, 41.50, might as well. I think at this stage with this kind of a vertical move up, you you want to start watching, if you're trading the short term, you want to start watching your position. So 39, 65, 69, we really want to hold above that, and like we have been doing, we can hold above it. We take out the highs. I think the 41, 47, 50 area is not too far. To the downside, we really want to watch our risk below 39, 69, because these things can also turn fiercely. But so far, I mean, the consolidations are very nice. Counter trends are very tight. Everything looks good. And that's just when you have to be a little bit cautious, right? So, and we talk about caution. We're like usually we're way early. We see it like around the corner. So when we talk about gold, it's really, you can see we have a weekly square coming out in October 31st, right? But when are we talking about potential risk? Now, it's the first week of October. So we're always a little bit ahead. It doesn't mean stop trading. It just means, hey, that's what headlights are kind of catching something out in the distance. And the price here will be 41.34. If
That
you
would
put
be a
two,
trick or treat, wouldn't it?
and that would be a trick or treat. Um, so we're 3 squares out, 156 bars out from the 22 low, and we're 312 degrees up. So I think we have to kind of watch for that. And it would make sense that we go up and tap that 41.37, 36, 41.40, 41.50. So we can get up into here. We have enough room to do that. And on the weekly, basically because of the weekly low is right up pretty much on the half square. The weekly reversal would be the big deal here in order to turn things around. So that would be 39.22, 39.20. Yeah, 39.22 would be the level you want to watch, or this week's low, last week's low. By the time you guys hear this, all right, let's move on to silver. Take a look what's happening. What's happening is we paused at the 50%, and that was 49.10. We peaked a little bit, came back, holding about the quarter square. Very bullish, I would say, if we can hold above that. Still very bullish if we can hold about 44 and a half, 44.60. So anywhere in here, any kind of a counter trend, I think is still good. 44.50 is going to be really important. So watch that very carefully. If we can hold here and trend higher, I think, we have a lot more to go. And obviously, if we can take out 49, the next level is 53 and a half. So we have some room to run. But to watch these two lower levels, because that's going to tell us the strength it's going to carry into next week. That's going to be a thing to watch. All right, let's move on to copper. Well, silver weekly. It just seems like, it won't be really complete till we can get up into at least finishing up the 135. And that would be right around 51 and a quarter. So we could still, there's some room to run. To the downside, 45.50, 45 is support on the weekly silver. Let's keep those numbers handy. Copper did great. We got above 495 and went all the way up to tap 515, 520. And of course, copper China news, we tanked again, just like we tanked on the tariff news that happened earlier at the square when we hit the 120. So the strength of this really is going to depend now on the 470. See if the 470 holds on any kind of a down, and of course this trend line. If the 470 goes, then I think there's a whole lot of all kinds of other trouble that's coming. Not necessarily related to copper, but copper chart tells you a lot of stories. So we'll have to really watch that. So I'm really hoping 470 holds. If it holds, we can probably crawl higher somehow. But if we don't, then we have a much longer mess, not just in copper, but in a lot of other areas, I think. I'm afraid that's what's coming up. All right, copper weekly. Can't say copper wasn't trying. We ran almost up to the full square, 535. Again, 480 is the level on the weekly chart. If you can hold above it, great. I think that'd be just fine. Everything is perfect. For the upside to go up and test 535. If we can't hold that, then I would expect some kind of a little bit more downside, maybe to test some of these trend lines. You guys can draw the trend lines here, catching the lows, and a quarter square, 450. But this is a weekly. Let's see what happens. If we can reverse fairly quick right around 480, I think we're okay. Copper can be saved, and the rest of the metals will probably support it. All right, moving on to Bitcoin. The reason for the circle, well, it was just to isolate this high. And I had this line drawn up here, and I made a post last week saying that we really shouldn't close above that line and move higher. That was basically signaling a high, right? And I think we talked about that last week, how this could end up becoming a high here, and all that looks like distribution. And well, so that was that. We reversed and well, a hell of a move down, way more than I would have guessed for one day. So you guys can see 111, 113, those areas were support. 109 was the sort of catch-all. And as you guys know, markets don't stop exactly where they should be. Obviously, we're going to violate that low. We're going to take out that low, flush everybody out. And you can see where the low came in. We basically took out that low. Did we take out that low? We're right there. Anyway, big recovery. This is why we talk about counter trends as a thing now. And it just looks like we have a little bit more downside left. So next couple of days, watch it to see if we can manage to take out this low or not. If we don't, if we hang around with a couple of inside bars or whatnot, then I think that might be it for the flush, because that was a big flush, and we caught up a lot of time with that price action. And if we slide down, then 103 is the next big support level. So 103, 250, okay, 247, 250. Write that down somewhere. And as we come down, if 111 holds, great. Then we have 109 and 103. So the big block between 109 and 103. And you can see how it just really just falls below those levels. And anyway, we got above this 111, 112 we're holding right now. Let's see what happens. But the high was great. And now I think we're gonna, let's watch what happens. We caught up a lot of the problem with this big down is we catch up with a lot of time. So we might not have extended move down. It might be just a short term, another quick low before we start moving higher. The question is where the low comes in. Those are the two levels. If you guys follow us on X, we'll post exactly when the low comes in. We'll see. So that's it for Bitcoin. Let's move on to the dollar. Dollar is doing pretty well. We had the low, we had the false break. We broke the trend line. We talked about a retest last week, how we're retesting that and we should move higher. Sure enough. And we talked about how the high price should be 99.5. And sure enough, the ABCD went right up into 99.50. Looks good. What's not to like? We've been bullish all through here. So because of, with good reason, right? We had 108 degrees there. So I would say as long as we can hold above the consolidation, we're in pretty good shape, especially above 98 and a quarter. And the push now to be, back up to the 72-degree line, which is around 101. Let's see how that happens, or if this ABCD is going to tap something off and we're going to, crash back down, or we're range bound. We have been range bound since May. So are we going to continue that, or can we move higher? The difference is on the counter trends, of course. Here's the dollar weekly, and that was the flush we talked about, and we were buying dollars since then, and since then we've gone higher. So dollar looks like that was the deal, right? We squared out, false break, moving higher. So basis the weekly, obviously this week's low. It'd be great to not break it. If it breaks it, then we have some question marks. We might even be in a consolidation before we roll higher. 97.83 area is full on support. 98.25 is also support. Let's see if we can hold there. But you guys can see the bigger pattern, right? It's starting to set up, especially the price action after the false break has been really good. This ABCD. So the problem with ABCD is once it terminates, we want to deal with the aftermath and see what the correction looks like. So we'll deal with that. No big deal. Just want to catch the trendy part, right? After that, we can deal with the rest. So finally, the euro breaks the 50%, 1650. And of course, we do an ABCD down, right? So let's see what we do with this. Key level to watch is 1650. Long as we're below that, euro is really weak. Obviously, long as we're below like 1708, the euro is very weak. So that's the weakness here. 1650, watch that. And to the downside, if we start rolling over, we're going to take this low out. So if that happens, then we're looking at 1351, 120 degrees up from the lows earlier this year. Yeah, and we could have an equal move here. Currencies love to do that. That's a possibility. We have a high low here. We can watch that. I mean, breaking this will basically tell us the quality of the move. And that's pretty much at the quarter level. So, and that ends up being 1496. We'll see if that happens. Anyway, I'll leave it on the board. Weekly euro finally broke the 50% level. And last couple of weeks, I've been saying like, I can't believe, it's even up here. So that's getting resolved. We had an inside week last week, and I said, if we take out the low this week, watch out. We took out the low and watch out, right? We started trading lower. The basis of weekly, long as the weekly high is in place, I think euro is in a little bit of a weaker spot. 1654. Watch that. That's a 50%. 54, 47, somewhere in there. The reason why my numbers kind of move around a little bit is because I'm not so hung up on the exact price level. A couple of ticks here and there is not a big deal. I'm more focused on the pattern and the relationship of price to the overlay. So if you guys see me changing numbers, a couple of points here and there, that's why. All right, getting back into natural gas, not much. We're still kind of in the process. Let's let it finish.
Yeah, we failed. We failed at that half square. I had it at 341, 342. So
Right
we're just
there.
going to be chopping around again.
Yeah, yeah. It'll have its day. We just have to be patient and follow the
Mm-hmm.
storyline, right? Hang Seng, well, we talked about we had two lines to work with. We had the we had the high at the quarter level, and then we had 26,230. We tapped that, came back to 230. Obviously, 26,230 is important now. Next week, we get below that, we got a lot more weakness. If we can hold above, it's okay. But we had a nice good run um, off of 19,450 level. So a little bit of a correction wouldn't hurt. 25,000 looks reasonable. And that's it for that. We'll let me put it back to you. I know you have a couple of things to cover, so let me pass it on now. And if you guys like our work, just a quick reminder, YouTube algos really like your likes and comments, and so please comment, like, share, and subscribe, and help us out, and we appreciate that.
Yeah, that was really good coverage of a chaotic week.
Thanks, Ben. Well, it took a little bit longer to cover the indices, but what to do, right? So we were 7/8 to the full square. We talked about 25,720,
Hmm.
and we were pretty sneaky. I think the same sneaky move was here, but on your squares, it was really at the quarter line. And 7/8 is also a termination zone, right? So 7/8 of
Yeah.
the square, it basically killed it. And yeah, let's see what happens next.
Yeah, the interesting thing is we had the 7/8 there, and then we had the Gann death zone, which is 45 to 49, and we did
Hmm.
49 right at the high.
Right. Boom.
So it was all there, and then we got this big move, and here we are at the next important level, right? We
Hmm.
close right near this 24,263. That's the 50% of the square.
Right.
I also highlighted out sort of the next important area, which is below, and that's the 3/8 here with the structural support you could see there as well. So 23,900 to 24,000 is going to be important. Don't be surprised if we push down into there, Sunday night, Monday. But the key level next week we want to see is, can we get over this 50% of the square, or do we get stuck under it? And that's going to determine whether, we get a counter trend up into here, or whether we're going to push further low, to set this first low. And 22.8 would be the next level, the full square there. So the other big thing was, I was tracking this from high to high. We did 212, which is right in the neighborhood of 216. So, and of course, from the April 7th low, we have the 135. So there's all kinds of timing in there at that high. And right now, it's this coming week, the 263 is your key level. And note that, just under 24,000, there's going to be support. So we'll watch that area and then see how it reacts. Let's look at the calendar day. This is one we were watching, coming into the square. And here's again a depiction of the sort of devious nature, how we went up an eighth an extra eighth, both in price and time, right there, and not mark the high, and then we got the big sell off. The support of 23.9 is right here. So again, we could push down there and not be surprised to find support there. So just like the normal chart, there's that 23,900 area that we want to watch, 24,000 for potential support.
Also, we have that lower one by one, that's kind of forming a channel. That's a
Hmm.
potential area for support. That one right there. Yep.
Hmm.
Yeah.
Yeah,
And
if
your
it
one
really
eight was
get
perfect, eh? Up there. 1/8
uh
into time and into price to the next
into time
square.
and price, yep. It
Very
it went a
nice.
little further in time and a little further in price just to
Mm-hmm.
throw people off. And again, that's that false break messing around, that it does when it squares out that you got to be aware of. And
So just to, I'm sorry,
go
go ahead
ahead.
and finish. I was going to say, you can see that happened in December. We went up a little bit higher than reversed. And same thing happened in February when we were waiting for this kind of that move we knew was coming because of the cycles, right?
Hmm.
Right
Hmm.
there. Hmm.
Yeah. So it's a common theme, and if you have if you're using the squares or some other technique like this, you can mark off those zones where, as Barry was saying, right, you want confirmation and you want to know that it's actually cleared the square, right? Because you're not getting stuck at the eighth, and this was a perfect example of it happening.
Hmm.
So it's just another way of filtering out the noise. Let's go check the weekly. On your weekly, the big thing you can see, we got an outside reversal bar, right? There's your big outside reversal. It's important. We want to watch this week. Do we get follow through? Do we make a lower low? That would really solidify that as an important turn point. And you can see why the 24,000 area, 23.9, 24 that we were talking about on the daily is important. Look at the weekly, what we have here. We have a full square, and this is 135 up from the COVID lows. So that's why this 23.9, 24,000 area is really, really important. Because weekly, if we get stuck under here weekly, then we're looking at, pressure down to the half square here at 21,000.
Right.
So let's watch 24,000 this week
Hmm.
and see how price acts around there. Can we, do we go an extra eighth here? Possible, right? That takes us to 23.7. But we really want to see if we can stay above this or do we get stuck? And as Barry was saying about, we could continue the melt up and run for Nasdaq, the 23.9 is key. That'll be the clue as to whether or not the melt up is still on. And it's possible. It could be, right? Like this could be a big down bar. We could push down and then
Hmm.
straddle it for a few weeks and chop around here and then go again. But if we get stuck under, then you can say the odds of the melt up continuing is not good. It would
Right.
not be favorable.
Mhm.
Let's look at the monthly really quickly. Monthly, there's that number again, Barry, 24,000. And this would be 180 up from the .com lows.
Right.
So you can see they're very different starting points we have for these. We got the COVID lows, we got .com lows for the monthly, COVID lows for the weekly,
Tariff
and
lows.
yeah, and then tariff lows and the sort of 22 lows for the daily. But it's all, sort of coming around this important level, this 23.9, 24,000 type area. So that is your key number for the NQs, monthly, weekly, daily basis. Watch it, see how price reacts to it on all the different time frames, and it'll give us a really good picture of, which direction is more probable based on how price settles around this 24,000. So the other interesting thing, Barry, I wanted to talk about was the
Hmm.
timing.
Right.
From the 22 lows that kind of kicked off this bull leg, we've done 36 months, which is a full 3-year cycle. So
Hmm.
that's significant. And if we look at high to high, from the highs in November of 21, before we had this big downdraft, to the highs this month is 47 months in that Gann death zone of 45 to 49.
There you go.
So there's
Hmm.
pretty significant timing there at that top, which means again, if we get stuck under 24,000, that would really be, evidence piling up that okay, this is not just a high, it's a pretty significant high, and
Right, right,
we have to expect more downside either in price or time or both.
right.
And that's it for the NQs. Anything you want to add on any of the NQ charts you want to point out?
No, I think you did great. You covered everything, and yeah, I think the thing is we don't want an information overload. It's I think we have just the right amount. We know the levels, sort of the basic storyline is in place. So I think yeah, we're
Yeah, and
good.
with the NQs, I think we can distill it down to this, 23.9 to 24,200 area is super duper important.
Yeah, if we slip that, we're going to slip a lot.
Yeah,
22.
yeah, that's
So,
right. That's right. We're going down like a couple thousand points or 1,000 points pretty
mm,
quickly, I think.
mm,
So let's see. We'll watch it and see how it plays out. All right, let's check out Bitcoin. There's some interesting stuff going on there too, which Barry started alluding to. I was when we were talking before the show, I said, Barry, in Bitcoin, we got the dreaded expanding triangle.
And we
And
talked
there,
about distribution last week, right? And
yeah, yeah. And there it is, right?
hmm
Where you got higher highs and lower lows. And it's really tough to trade this if you're trying to be a breakout trader because you're just going to get crushed, right? So it's
right.
almost you almost got to look at the opposite. The other thing we've got for helping us here is we've got the levels, right? Above this 108, we can get up to 120. Below
Hmm.
120, we're going to push down to 108. And so
Right.
at least we have some markers here to help us. Again, keeping on it sort of looks like it's the theme of the show, that 1/8 thing, right?
Hmm.
Look at what they did here,
Yep.
right? We pushed down perfectly to the 1/8, flushed everybody out by breaking the lows here, but it was false because again, that 1/8 held and
Right.
we pushed right back up into the, square above the full square.
Hmm.
So if you can incorporate this somehow, I can't tell you how many times it's saved me from, thinking, oh, let's sell this breakout. We're pushing below, in many different markets. You've seen it in different markets. We showed it to you in the S&P. We showed it to you in the NQs. Here's in Bitcoin. You can see it in commodities. It really is a sort of an account saver because these sort of things can crush you.
Right.
In addition to crushing your psyche because you think, oh, I've got a good setup, I can take it, and then boom, it reverses right back on you. So anyway, and that mental capital is really important to protect. Anyway, the key levels here, right? We're going to watch this 108 and we're going to watch the 119. In between, we could just be chopping around, so be careful here. These expanding triangles can really, really cut you up. All right, let's jump to the weekly, see what the weekly shows us. The weekly was a really good chart for us. We
Hmm.
caught that high. Barry caught it on the daily. We caught it here,
And the four
perfect level.
hour.
And the 4 hour, right? Oh, right, the 4 hour too. Here's the 126 was the key level. We knew when we reversed here off of that this level was a good high, and now we have this bracket of 107 to 126, and it could with these big violent moves, it could just chop around in here and burn off time before the next move. Bigger picture, looking back, as long as we hold 107, that's bullish, right? Because that were the
Yep.
highs in, late last year, early this year.
Yep. Yep.
So as long as we hold that, it's bullish longer term. If we
Mm,
get stuck under there, then we're doing something else, and there's a bigger correction in price and time that's going to happen.
mm,
But for now, this 107, 108 on the downside is key. Got to watch that and make sure we hold it. The monthly I wanted to show just because if you watched last week's show, we had a big bullish bar here. Boy, what a change a week makes.
hmm
And you can see the expanding nature of the triangle that we're going into. Monthly basis, it's 111, and this is where we're sort of settling and messing around here until we in the next couple of weeks until this monthly bar prints, we really want to see the reference of where price ends up next to this 111. But it's a huge change in the bar. Last week we were up here and this was a big green bar, and now we've got these, big wicks on either side and a little body. So it's a it's a chop zone. That's it for Bitcoin. Let's jump, and I know you don't have anything else to add because you already talked about Bitcoin. So let's jump
Hmm.
over to the commodity area. Saw a lot of movement this week, mostly corrections to potentially bullish trends setting up. In corn, there's an ABCD target down to about 404. We want to watch that this coming week. The weekly, the 412 full square is super important. We need to maintain price above that. So those are the things we're watching. Soybeans are pulling back. Sugar is pulling back after a good move up. Cocoa, we're going to be looking for a short setup on a bounce higher. That has been noticeably weaker. And so this coming week, if we get a little rally up into resistance, I'll highlight that one because I think that's setting up for a short. The one that we want to review because it looks like it's time is coffee. So coffee, as we've been talking about for the last couple of weeks, has been setting up for I think, a nice short. We got a weekly close this week below 380. So next week, this is daily, but we have the daily close of below 380. But we want to watch this 380 next week. If we get stuck under it and can't get above that, I want to pull the trigger here. Feels like it's been chopping around here for a couple weeks now, Barry, trying to throw people off. But it looks to me like we're ready to roll over here on coffee. So this week we're going to watch this thing like a hawk.
Yep.
Probably drop down to the 4 hour and sort of see if we can get a setup there because it really looks like it's going to make the next move. And if you look at your cocoa charts, cocoa may be the preview of what's happening in coffee. Very similar pattern. Had a high, lower high, big dip, lower high came in, came back up, chopped around, and then gave it up. So I think the give up is a lot closer in coffee than we've been in the last few weeks. Let's look at the weekly so you can see the setup here. Same story here. This 380, 384 area we want to stay below. If we do, 358's next. If we give up 358, there's that eighth again, Barry. If we give up 358, we probably take out this eighth and head down to 330. And if you go into cocoa again, go look at cocoa because I think coffee is really following that from a pattern standpoint. Uh, it would project coffee heading down to this high here, down to the 250, right? Right back to that big breakout. So I think the timing is coming in here. Ready. It's almost ready. Here's
Okay.
a little view of the monthly. The monthly, we've got an inside bar as it's bounced up and now it's stalling. So I think the rollover's coming here. Anything else stand out to you on this coffee chart?
Well, I think you gave the perfect line, watch it like a hawk, see if you can get
Yeah,
positioned, with
yeah,
low risk.
right.
Yep.
Drop down to your lower time frame, see if you can get positioned, and and then when it rips, if it does what we think, you'll be in it because it's hard to chase these things. I mean, when they go, look at when they go, they really, really move. So this is the week. Let's watch it and see if we can see if we can catch a move here. The last one I have is I already talked about nat gas and that we failed at that half square at 341, so we got to watch that more. The last one that I have is just the circle chart for crude. And the reason I wanted to show this, Barry was showing the weakness in crude and how, he thinks a flush is coming. And we've been talking about how if we can't get away from the circle, even though we're outside the circle, it still has a draw here and can pull really sharply. And this past week's price action fits that. Next week, next week, this is still the monthly bar. We've got a couple more weeks left in this monthly bar, we could really accelerate down. If we go down to this eighth here, we're looking at 56. And if we can really get going and hug that square, we're looking at 49.
And
So
you've been talking about this for weeks and weeks, and damn it if it's not holding perfectly.
yeah,
It's
yeah. I mean,
like,
you could see how it held it on the
yeah,
inside. Then when
yeah,
it
yeah.
gets out, it's like it's
Now
not
it's
letting it
accelerating,
go.
right?
And you know what's interesting, really interesting about this, Barry? We could get this flush, and then as it moves to the next month and gets, one more, sort of bar
Mm-hmm.
away,
Mm-hmm.
it'll start losing its grip, and then we can get
Right,
that big rally that you're looking for as well.
right, right.
Because once the circle loses its power, the move comes in the opposite. The next move comes in the opposite direction. Like here, you can see how it was held
Exactly.
guiding it up. It loses it, and then then it lets go, and it goes down
Mm-hmm.
sharply. So we could have some really really good trading coming up in crude oil. The other thing on crude I was monitoring on the weekly chart, the 11 and the 22 week cycles there. We have a
Mm-hmm.
22-week cycle high to low that will terminate around the week of November 28th. So timing wise, we're looking at, let's see, it's going to be right there. That's the monthly timing, which would coincide with the
Mm-hmm.
weekly cycle. So it's going to be at a half square. It's going to be like the last bar, the next bar away from the circle. So we could get that low right there and then take off going in the other direction. So things are kind of lining up there, like just like I was saying, they were lining up for coffee. Things are lining up where crude looks like it could be really, really fast moves in both directions. Like we could play this thing both ways. So let's stay on top of crude. Let's, watch your 4 hour charts, watch your daily charts, but the trading in this could get really, really exciting over the next couple months into the end of the year.
Mm-hmm.
And that's it for the commodities. We are watching them. As I said, corn and the grains was trying to complete an ABCD and stay over important levels, but everything kind of got sold on Friday. And so let's see how these sell-offs work. Do they give us higher lows than the ones where we were looking for bullish setups? Do we get lower highs than the ones that are setting up on the bearish side? If they do, again, the trading could be really, really exciting into year end in this space. And that's about it. Otherwise, we try to identify these timing windows. I know we talk about them ad infinitum, and people sometimes in some of the comments I see in the videos, they get a little frustrated that nothing happens in those windows. That's okay. That's normal. Just know that when we identify the window, it just creates that higher probability where you watch these important levels, and when they hit those levels and either hold or don't, it gives you the odds, in your favor to make one of these big moves. So we're going to continue to see that, and we'll continue to sort of call those things out. Otherwise, great show, Barry. The levels you gave, have us ready for this week, and I'm going to be resting up over the next couple of days so that I'm ready to go because I know it's going to be very active trading in the coming week.
Absolutely. And great job, Ben. And we'll see you guys next week. And please remember, if you like the stuff that we do, please remember to like, subscribe, and hit the alerts, and share, and comment. Right, Ben? That's about
Absolutely.
only thing we ask for. Anyway, have a great week. We'll see you guys next Friday.
Take care, everybody. We'll talk to you soon.
All right, bye bye.
Bye.